Hello everybody, this is Pat Walker, Mission Winners, making a training coaching video for everybody out there on the ETFs. Why do we do this? It's not because we just want to look at charts. We want to use our times wisely. But we know these facts. Leading groups produce leading stocks, and leading stocks produce leading groups. We focus on strength. Looking at the charts shows us strength, but also weakness, areas to avoid. Case in point, here's biotechnology, the biotech ETF. It says so in the upper left-hand corner. And you can see it's below all the moving averages. What's this telling you? Be careful with this, okay? Is this the kind of setup you're going to see in any book that says, oh, this is where you want to buy? No. So it says avoid biotechnology. Next one, cloud computing. This is in a steady downtrend below all the moving averages. Be careful with cloud computing. Electric vehicles, look at this. I mean, Tesla's a major part of this. I'd be really careful with electric vehicles. There you go. Dow Jones Internet, okay? FDN's the ticker symbol, by the way. You can always see this, and this is the name of the ETF. It's dropping also. Be careful with internet stocks. IBD 50. This is a great lesson right here. This is the great proxy for leadership in the market, the IBD 50 stocks, okay? Look what it's doing here. I mean, it gapped down hard on a big pickup in volume. It's telling you, be careful with IBD 50, with growth stocks in general. Please know this. This is not a criticism of the IBD 50 list. No, it's just the cold, hard reality. Right now, they're selling across the board in leadership. There you go. That's power to know. Gold miners, be careful with gold miners. Look at this. By the way, this is the 200-day. This is the 50-day. Simple. This is the 21 exponential and the 8 exponential. It's below all the falling moving averages. We haven't been involved in gold miners for a long time. And there's another reason why. Because of this. Gold. Look at that. Steer clear. Another biotechnology ETF. Steer clear. Online retail. I'd steer clear. Oil and gas exploration. Look at what this is doing. This was basing nicely, and look at a gap down. Look at that gap down on heavy volume. I'd be careful with that for right at this point in time. Expand in tech software, technology software. It's dropping hard. I'd be careful with that. Or avoid. U.S. medicine, I would avoid for right now. Mid-cap, I'd be careful with that. All right. Home construction, it's hanging in kind of. It's one of the few that actually was up a little bit on Friday. Look at that. Maybe a sign of strength, but overall the market is slipping. Err to the side of caution. Okay, it's that simple. You don't have to overthink it. Growth index, look at this. The S&P 500 growth. Look at that. Dropping, be cautious. IWM, small caps, be cautious. Here's the beautiful part of what we were doing. We make videos on this every week. I look at the ETFs once or twice a day, and it guides us on what to do and what not to do. Small caps, it's been talking. It rallies up to the falling 200-day and drops. Look at this. Look at that. It's been telling you, rallies up to the 200-day social. Yeah, leave it alone. Leave it alone. It will be good sometime. I guarantee it. It will be. It will be ready with no scars, and I like that too. Global jets, airline type of stuff, nothing really great there. I'd be careful with that. Regional banking, see that regional banking? That's lagging. I'd be careful with that. Mid-cap, look at the drop in mid-cap. A gap down and a gap down. A gap down here. Be careful with mid-cap stocks. Oil services dropping. Energy, be careful with energy. Oil dropping, be careful with oil. Online retail, it's been ragged for a while. And look at this drop. Here's the beautiful part. Using these tactics, we haven't been involved in any stocks. Okay, we've been selling stuff into strength and lightening up, and our exposure is basically nothing. The charts were telling you, don't argue with it. Don't argue with it, and that helps us. It's good financially, and it's good mentally. Those are two assets, the mental side of things, the financial side of things. Control your mindset. By risk control, good risk control, you're controlling your mindset. No negative energy here, okay? Infrastructure dropping pretty hard. I'd be careful with that. Pharmaceuticals, yeah, well, they need drugs, don't they? Nothing good going on there. NASDAQ 100, look at this. I mean, these are the big institutional growth stocks, and look at what it's doing. But here's the best part. This will eventually turn, folks. Know that. Don't get negative. I can't stress this enough. It likes, oh, this looks like the end of the world. We made a couple of videos on this last week, the end of last week, pointing out, yeah, it's dropping now, but we're coming into the last quarter of the year, which is seasonally very, very strong. Be ready for it. You're not getting hurt here. We're not getting hurt here. We'll be in great shape when it turns, and it will turn. Bull markets have not been outlawed, okay? Rest in that. You can say, oh, that's easy for you to say. Hey, I was doing this in 1986. I managed money through the crash of 87. So this, we've ridden all these ponies before. There you go. And my goal here is just to help people. NASDAQ 100 QQQ, be careful with that. That's the non-leveraged one. Retail. Guess what? They ain't shopping, are they? Here we go. Cloud computing, looks like it's raining for me, okay? Silver, bit tarnished. Okay, I'll stop with the dad humor, okay? If my kids were listening, they'd be shaking their heads, going, oh boy, here he goes. Silver, not so good. Steel, lagging, dropping, not so good. Be careful with that. Semiconductors, this has been ugly for a long time. We haven't been involved in semiconductors, and I hope you haven't either. It's told us to stay away. That's simple. Spiders, S&P 500. I look at this all the time. This is on my front page. Rallies up to the 200-day falls. By the way, this was a higher low setup. You see this low versus this low? We were heavily invested in QLD, SSO, and MAXLIST stocks. But look at it now. We locked it in. We're fine. We're just sitting watching. SSO, there's the higher low on SSO. Look at that. Higher low. This low higher than this low. Lifts. That was a good run. Continue, but nothing to do with it now. Solar's lagging. Be careful with solar. Small cap. The small cap leverage. Be careful with that. That's no good. Uranium. Yeah, get a Geiger counter on that one. Maybe a heart monitor. Nothing good there. Oil. Another oil ETF. Nothing great there. Aerospace and defense. Nothing. Biotechnology. Lagging. Home builders. Lagging. Materials. Dropping. By the way, XLE. Dropping. I'm going to pause here for a minute. Please don't go away and say, boy, Pat Walker's negative. Oh, no. I'm just reporting what is. It's like it looks outside and it's raining. Oh, it's raining. No. Oh, it's raining. That's all. It's not good. It's not bad. It's just raining. Eventually, I will say it again. These declines will lead to a great advance. It always has and it always will. And we'll be ready with no baggage. That's why I make these videos, is to help you. Financials, be careful with financials. We're about done. Industrials, be careful with industrials. Technology. Look at this. Has been talking. Rallies up at the 200-day and it falls. It's been telling you, yeah, you better be careful with technology, which is why we haven't been buying and arguing with things. We've been locking in profits and not doing anything. And that helps too. Consumer staples, not so good. Utilities, yeah, a little bit of support on the 200-day. Kind of a defensive type of sector, right? There we go. Healthcare, it's okay. It's okay, but nothing great. Consumer discretionary, dropping, be careful. Metals and mining, it's told you. Losing the 200-day, losing the 50-day, stay away. And we did. Oil, another oil ETF. I think we built a case. You got to be careful with energy. There we go. Retailing, not so good. Software, not so good. So now let's look at the MAXLIST stocks. What do you say? Apple. It's actually, I just showed you a bunch of ETFs that took out the lows from over a week ago. Apple did not. That's a sign of slight power, okay? That's the things we look at. I'm not saying buy it. I'm just saying, watch this. Here's QLD. Look at the waterfall in QLD, okay? This took out the lows from last week by a huge margin. Here's Apple. It didn't take out the lows from last week. I'm not saying buy it, but I am saying it's exhibiting a little bit better strength in the markets. There you go. Continue onwards. Amazon. Yeah, they took out the lows from last week. This animal's still dropping. It'll eventually create a great opportunity. We just have to wait for it. But for right now, we're not involved with it. Alibaba, bye-bye. Nothing to do with it. BIDU, nothing. Leave it alone. Google, nothing to do with it. Leave it alone. It's dropping. Just wait. Don't impose your will on it. The old Facebook called Meta now. Nothing great there. Nothing. Microsoft. Not so good, folks. This was a higher low setup here, though. This low was higher than this low, and this was a buy. And that was a good run for us. But right now it's hitting new lows on heavier volume on Friday. Be careful with that. Netflix, just basing right here, okay? This was real good. These are notes from a long time ago, but you can see it's actually basing. I'd like to do a compare and contrast. Here's Netflix hanging near the 50-day, right? There's Apple a little bit below the 50-day. Amazon way below the 50-day. Alibaba below everything. BIDU, ugly. Google below the falling 50-day. Meta way below the falling 50-day. Microsoft, hold on, let's fix that. Microsoft way below the moving averages. You see that? Way below the green line. Netflix, oh, near the green line. There was some accumulation in there. Maybe that'll be an opportunity. I'm not saying it is now. Remember, the emission winners, the markets, don't argue with the markets. They're bigger than all of us. Get in line with it. But this one is exhibiting better strength than others. There you go. NVIDIA, lower lows. Stay away from it. By the way, I mentioned the higher low setup a couple of times in this video. Here it is. This low was higher than this low. You see that? Nothing fancy. Buys, and look at the nice run. There you go. But right now, lower lows, leave it alone. Tesla. Tesla had a nice run for us. You see that little base breakout right there? We bought here, rallied up, sold some into strength, did this. Some people bought here, and then it started to fall, and those shares were sold, and it kept on falling, and the rest was sold from the share buys down here around 285, 286, and there were sells up here near 305 to 310. There we go. And we're out. We're sold. Here's a great maxim for you. This is a real-time lesson for you, folks. Buy here, great run. Sell into strength, and here is the maxim. Never let a good profit turn into a loss.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.